Yo, what is up, guys? I'm back at you with another valuable video. It's just me today again. Um, Joe is running around with his head cut off with all the soccer and baseball, football, everything his kids are in. So he's running around. But we're going to be talking about something very powerful today, other than, you know, what these markets are moved on. You know what I mean? What these markets move towards is money, right? So before we get started, what I want you to do is I want you to like and subscribe. I want you to go hit us up on Instagram and go follow us there. You can ask questions there. Drop a comment in the comment section on the video on what videos you want shot. Go join our free Telegram. I'm dropping charts in there. I dropped a chart in there today with a beautiful, beautiful SPX trade today. Beautiful. Called it out to the group. We did get stopped out first on the first go around and then got right back in. Rode it all the way to the moon. Okay, so let's do this. You guys know that I always talk about this, and I am like a big believer on liquidity. Liquidity is the reason why this market moves the way it moves because, guys, it's all about the money. If you design a system that was to be designed to grab orders, fake people out, get people to do something that they don't want to do, blah blah blah. It's all about money. It's all about money. It's all about where the most money is at a specific area. Let's go towards it. Let's go get it. Right. So that's what I want you to be aware of. That's what I'm going to show you on some trade setups is, if you're getting stopped out on some trades that you're not aware of the spikes and the things that are coming, in the future. If you're trading London, you're getting the trades, or you're trading in between London and New York, and you're like, why am I getting stopped out? I'm getting stopped out on one candle and things like that. This is the reason why you're a part of that liquidity. Okay, so I tell our students this all the time. If you do not understand liquidity, you will be liquidity, right? And it makes a lot of sense because if you don't understand it and you're a part of that, that the sheep, you're going to get smoked every time. You're going to get smoked. You're going to be in the lane of fire, and you're going to get it, right? They're going to hand you that whooping every time. So what I'm going to do is I'm going to share my chart, and I'm just going to map out some, kind of what I did last week is high probability setups, but it's I'm going to structure the whole trade setup, right? So let's dive deep. Share my screen. Okay, cool. So just like today on gold, okay, I know gold is it's in a really jacked up area, but I want to go off of this. You can see that gold is moving up, right? Our direction is up. I did see this imbalance here. I was aware of it. I was like, man, maybe we could come back down, and fall into it, grab that void, and maybe have a reaction there. But the way it's set up today with the news and everything, I was like, okay, cool. We could potentially get a rise out of this. Okay. Because on the higher time frame, gold could easily take out what? Take out liquidity, this high. It's at an order block now. It did pull into it nicely and reacted off of it. But you guys know that I like to see liquidity take when it comes to my trades. You can see that we do have, okay, we have imbalance up here that we could potentially go back to. It could easily go back to these areas, right? You have a high here. You have a high here that we're already at. Okay. So that's my objective, right? So, and we are bullish, right? So if I was on the 15-minute time frame, I'm thinking power of three, right? I'm thinking manipulation. I mean, accumulation, manipulation, real move, and that's kind of what I seen today. It didn't really give me the perfect trade setup. I ended up getting out. It didn't give me the all around performance of what I needed, but it was good. It was good. It was enough. Okay. So you can see here that we accumulated, right off the muscle, and then we dropped, right? That's what I want to see. If I'm going to rise, I want to be in a discounted price, especially when my direction's up. I want to be discounted before I start to take. I don't want to buy at a high, right? So as you can see, we dropped down, we created the leg, right? We started creating legs, we started creating the W pattern. And I want you to pay attention to that candle right there. Okay, that's 1500. Okay, that is my broker's time. Okay, and then you got that is when the news came up. Okay, you can see that news shot down. Look how it shot down. This is how I use it. This is how you got to understand right here. This is how I use it. Like, you got all of this money right here. We can put all of this dollar signs, okay? Right there. Okay. And soon as that low was grabbed, wham, pulled back in and gave me good displacement. You see that bullish candle? I was waiting for that. Even if we started to move bearish, I would have left it. I'd be like, okay, we're not ready to go back up. So as soon as we get the displacement back up, induce people to go short, right? And then send it back up. I was breaking down to the lower time frame, okay? Even the 1 minute time frame. So I was breaking down and I seen this. So we got the manipulation, right? Send it back up, okay? And then we come back in. I was going to grab an entry right here. I did not. I wanted to break. I wanted to create structure and break structure, which it did. This swing broke structure, okay? Broke here and it broke here. So then what? What was my next move? I wanted to look for what? An imbalance. You can see the imbalance right there, right here, okay? And we pulled into it right there. Sniper entry, okay? Sniper entry, also entry right here, then also close above the 13. I got mid, okay? So you can see here, we played around, and eventually went in our favor, okay? The stop loss was here. Because there's no reason, guys, there's no reason why it should come back now. There's no reason. If this is the low of the day, then this is going to stay the low of the day, right? And then it just went my favor, right? So then I want you to pay attention to this. Then I look at my mind. I'm like, okay, so now go back to your macro, which is, I know 5 minutes not macro, but your intraday trading. You can even go back to the 15. Now, if your entry's here, okay, where the red line is, what is your objective? Think about it. What is your objective? Your objective is to go and grab things where people are going to set their stop loss, right? Areas where people's stop losses are at. So that high, this high, you could have took partials off here, right? At 80 pips, right? So if your stop loss is here at 38, 80 pips, that was a little bit more than a 2-to-1. Okay. Took some money off and then let the rest ride, right? So that's what I'm saying, guys, is this right here. Let them show their hand. Let them show their hand and then get in, right? Let them show their hand. Let them manipulate the people that are already in. You got them out. People are already buying, right? So I'll show you some more examples. Like right here, guys, like when this day, when we were bullish, this was an easy given, okay? Especially right here. Let me get rid of these EMAs so you can see price, okay? I want you to pay attention to that high, okay? So if we made a high and we're bullish, right? If we made a high, then we made a low, then we made another high that's equal, and then we went back into the accumulation phase, and then we stop hunting low, that is a dead given if you're bullish, okay? And you can see that these lows right here, accumulation, got an accumulation phase. And then that stop hunt out of London, okay, grabbed all that liquidity here, okay? And then we started to move up, right? And you can see that this was low hanging fruit. These two highs was low hanging fruit. It was a dead given. Look how the price, okay? Look how this candle hit that high, same high, and then pull back in. It is letting people know that this could be resistance, right? And look how it did. It pulls in. I want to show you this trade. We took this as well, okay? Right here. We're bullish. I'm looking for buys, okay? Look at this. So we send, we get good displacement, okay? And then we come back in. I'm going to show you this on the 1 minute, okay? It was perfect. Maybe it's here. It's here. Okay. So look how we get displacement. We break that high, okay? And then we're waiting for our entry. Boom. We get our entry on what? Right here. Okay. Pulls into the imbalance. There's your entry. You can snipe it, or you can wait for the close of the 13 and get in the trade. Boom. Look, then it pulls back on you and gives you another area of entry, right? But look, guys, if you want a sniper entry, you can see this. We broke structure, right? That's cool. This is an OTE entry. So if it broke structure, pulls into what? The optimal trade entry, and bam. It broke structure again, pulls into an optimal trade entry, and smokes again, right? And you had imbalances all in here. Okay. So that's the name of the game, guys, is that. Like it's so easy. There was a trade that we took last week on SPX. I'll show that it was just flawless, beautiful, and exactly what I'm talking about. Okay. So I want you to pay attention. When you're trading these indices, guys, in my experience, I think you should wait until equity hour opens, which is 8:30 my time, Central. Okay. So whatever time that is for you. Okay. So you can see how that candle is 14:30. That's my broker's time. Okay. I'm talking about this trade right here. You can clearly see that we're moving down. Okay. We're below the EMAs. We come up. Uh, we come up. This is London. We come up, make a high in London. We stop relative to that one, right? And then we come down. Okay, so we got this high and this high just resting. Okay, that knowing that people sold from yesterday and from London, because why? Because this was now resistance. Okay, now I want you to pay attention. Pay timing and liquidity is the biggest thing in this market. I'm telling you guys. Okay. So this is why I want you to focus. I want you to focus on their hands. Okay. So watch. We already know our directions now. Move the EMAs. Look at the 8:30 hour. Wham. We create the high right out of the gate. Let me fix this real quick. So you know that this is okay. So you know this is New York. Okay, look how it created the high right here and then shot down and gave a bearish candle. Already people were selling. Okay, already people were selling, and then they send on equity hour. Wham, because people are setting their stop losses really tight, right? Not only did it grab this relative equal high, it grabbed yesterday's high. Boom, grab. Okay, pulls in. Next candle. Boom, gives us displacement. Let's look on lower time frame where we got our entry. Okay, it was beautiful. I don't remember what day that was. There it is. Okay. Now, look, as it grabs, right? As we give displacement, you can see here, look, this right here, this candle breaks the neck. Okay. As we break down, now this is considered as a breaker. Boom, we break down. Okay. What's my entry? I see here. And that's the game. That's the thing, guys. I've already framed the trade setup due to their hand, their liquidity grab in the downward movement, right? We've already accumulated. Okay, we're in a premium price. We're accumulated, stop hunted high, and now we're looking for a way to sell it back off, right? Because overall, bigger time frame, we have an objective. We have liquidity that we're chasing, right? And our objective is to get down to a lower time frame and also see that manipulation and get into a either premium or discounted price where we can make our way towards that big money, right? So you can see here, we pull into here, okay? There's entries all in here, okay? You could have waited for the close of below the 13, which has been here, pulled into the imbalance, boom, got your entry. Your entries all in here. You could have waited all the way to the top. Your entry would have been 220 pips, 230 pips. You could have put it above that high right here. There's no reason, guys. There's no reason why it should go back like past that high. There's no reason. There's no reason, right? If this is keeping price down, okay, especially the swing up as an order block. It should keep price down, right? So setting your stop loss above that high or even this high, right? So if you got entry here to there, 224, 150, right? And then boom, what are you chasing? Start to get on your higher time frame, back to your 5, 15, and see what you're chasing. What? Relative equal lows. Look at them. Look how it runs right through it, pulls off it, right? Runs through it. Everybody thinks break, retest, go. They don't even give them a free lunch. They don't even keep going, right? They get them in a drawdown, and then they grab it again, and then they pull it away, right? So that's what I'm talking about, guys. Always understand liquidity or you will be the liquidity. Always know. And look, guys, everything about this trade was good. You had low, higher high, high, lower high, divergence, right? On the trade, right? You can even go to, I don't know if it did it 27th on NAS, and you could even go to the fact of going to that same day. It did give it. Like, it would be really cool if NAS had a low, I mean high, right? Comes in like this, and then it comes up, makes a lower high, and then drops and gives you the same setup, right? Because then what would it be? You have two correlating pairs, SMT divergence. Okay. So that correlating divergence. So, and a lot of these terminologies, guys, that I'm using like SMT, things like that, that's coming, from the GOAT ICT. I've learned a lot from that guy. I consider him the GOAT of trading, right? If you haven't watched his content, go watch it. So yeah, guys, that's pretty much it. That is it's simplicity, guys. Like even here, look at and don't get me wrong, like think about when you're on the higher time frame, look at these trade setups that take liquidity. I want you to look at them. Okay. What are they? Every time it takes liquidity, it's a shark fin. Not every time. Okay. But the ones that are high probability, when it takes liquidity, it is a shark fin. Look how that New York took out London, and it was a shark fin, 1 hour, right? So you look at that. You look at that. If it's in your timing, now are they going to win every single time? No. But they are very high probability. That is a 90-10 trade. 90% is going to win, 10% is going to lose, right? So like right here, this is probably a 30-minute. Okay, I love the 30-minute and 1 hour shark fins because you can see here, accumulation, stop hunt, grab a high, grab yesterday's high, shark fin, see you, right? It's ideal, guys. You just got to pay attention to the market movement. You got to know your directional bias. That's why you always start from the higher time frame. It's just like this daily. When this daily low got taken out, I knew exactly what it was about to do. It was going to induce people to go short and then pull it back. And look what's happening. I was on a call with a brand new student and said, "Do you really think that that's going to pull it? You 100% confident?" I was like, "You know what? I'll bet I'll put $100 on it that this market will pull back." I'm that confident in the liquidity graphs because I know for a fact there's orders here. And if I designed it by knowing these concepts, if I design it, it makes sense, right? That makes more sense to me than support resistance. That makes more sense, right? Like if you got this high here, liquidity grab, see you. I'm gonna grab the money and I'm going to induce people to go somewhere that I'm not going and then see you. I'm gonna grab their money too. It makes sense, right? So always remember that. Understand it. Study it. I have a plethora of videos about liquidity. I don't think this in depth, but on our YouTube channel. So just scroll around and look at our content. It's very, very useful. It's very, very clean. And if you guys are struggling, you need somebody to push you. Just, you need that extra help. Then join our academy, guys. Join our academy, and I'll help you. Okay. So with that, guys, It has been really good. This is really good stuff. Just go back, just go to your daily time frame, guys, and just go back and look at equal highs, lows, and highs, and look how it runs it out before it leaves. Always low hanging fruit. Got ran out left, right? It happens. Happens. Even right here. You can see here. Not only did it grab this high, it grabbed these equal highs on the daily. Okay? Grabbed them left. That's what it is. Right? So with that, guys, I hope that was a value to you. Just like I said in the beginning, don't forget to like and subscribe. Don't forget to message us on Instagram if you want some questions answered. Drop a comment below if you want a video shot. That helps me out because it gives me an idea of like what are you struggling with. You know what I'm saying? You guys could be struggling with something, saying, I wish he would shoot a video on this, that. Just drop a comment on the video and I'll look at it and I'll shoot it. Okay. And also go join our free Telegram, guys. I'm going to be dropping a lot more stuff in there, a lot more nuggets, a lot more stuff. We might even do free stuff. I don't know. Me and Joe have got a lot of things planned. We're just trying to map everything out, right? So with that, guys, hope this helped you out, and you guys keep pipping and dipping, and I'll catch you in the next one. Peace.